Welcome back to EDS, and in this video we're going to take a look at how you can write your own options contracts, place trades that have a very high probability of profit, and collect premium up front and generate consistent returns year on year. So the first thing that we need to do is open up our brokerage platform. We're using tastytrade, and of course we're going to be using options contracts. So we need to know where we are in the options cycle. So if we just open up any underlying, let's just say if we go with Apple, and we are now presented with a list of expirations. So we've got our weekly expirations, and then everything else without an orange W is a monthly expiration. So we like to be around 45 days out in time. Anywhere between 30 and 60 days will do. So the next monthly expiration, and also we only want to be on monthly expirations, not weekly expirations. So the next monthly expiration is October 18th. It is 17 days away. That is a little bit too close for us. So we're going to go to the next one down, which is November 15th. And that is exactly 45 days out in time, which is perfect for us. So now we can take that information, come over to our watch list, and filter out everything that has earnings over the next 45 days. The reason for this is we do not want earnings to disturb our trade. Earnings can mess up your deltas. It can almost definitely increase volatility. All of these things are going to have a negative effect on your P&L because we are selling options contracts, not buying them. Okay, so we filtered out everything that has earnings. We can also filter out everything that has a low liquidity level. And what we'll be left with is a list of things that we can trade that has a high liquidity level and does not have earnings over the next 45 days. Now we can list everything from high IVR to low IVR. Now we just go down the list and see what we like. Now, when it comes to looking at what we like, we need to keep in mind what's already in our portfolio. If we're too heavy in one sector, it's not a good thing. We want to make sure we are nice and diverse. So keep that in mind when you are looking through your watch list. And now we can just go through the list. We've got a couple of Chinese stocks up at the top. Um, and we can just go down the list. I have had a little look at this list earlier. We've had a look at positions on GLD, Baidu, Baba recently. We've got a position on GDXJ, SMH. We've got a position on. The one that I was looking at was XLE. It's trading at about $90. It's got an IV rank of 51.7, and it's got 4 out of 4 stars on the liquidity ranking. So far, XLE looks like a prime contender for something we might want to trade. So let's take a little bit of a deeper look into XLE. We pull up the trade tab, and then we want to be 45 days out in time. So we go to the November 15th expiration. And as you can see, we have already mocked up a little position here, but I'll talk you through what we did. So the orange horizontal line here shows you where the price of XLE currently is. It's currently trading at $89.41, which is right in between $89 and $90 here. And the vertical orange bar is the expected move of XLE over the next 45 days. So as you can see here, we've sold or we'd be looking to sell a put contract here at the 82 strike, and we'd be looking to sell a call contract at the 97 strike. Now, as you can see, these contracts are sitting further out beyond where the expected move is, and this is going to give us a very high probability of profit, and that can be seen here. We're looking at a probability of profit of 72%, and if we did want to get out of this trade early at 50% of max profit, we've got an 86% chance of this trade working out for us. So if we were to plot this on the chart, what would this look like? So we've got our strikes at 82 and 97, 82 and 97. About there will do. So as you can see here, we've got a very wide range for ourselves, and all we need for XLE to do is simply stay within this range, and at expiration, if it is within that range, then we will keep all of the premium that we collect. Now, how much premium do we collect? Well, we would collect $1.40 per share. 100 shares in the contract. So we would collect $140 up front. Our broker would require just over $1,000 in buying power to open this trade, and we would collect $1.40 or $140 up front. We'd get a daily theta decay of $4.33. This is a naked position, and you do get the unlimited loss potential. And if that did make you feel a little bit uncomfortable, or if the buying power requirement was a little bit too high for your liking, by all means, you can just come to your short strike, go a little bit further out, say 2 strikes out, $2 down, and simply just buy that strike, buy that contract. So we've created a $2 wide spread here, and we can simply just do the same thing on the put side, just go $2 down and buy that contract. And now we've got a $2 spread on either side. As you can see here, our buying power requirement has dropped significantly. We now only require $150 to open this position. We no longer have an unlimited loss potential. We have a max loss of $150, and we collect $50 up front. So we collect less up front, but we require less in buying power. So overall, this is a much higher return on capital trade. And in return for that, we do get a slightly lower probability of profit. So it is a little bit of a trade-off, but that's how you can find a position and how you can manipulate it to fit inside your portfolio. There is one other thing that you do need to keep in mind, and that is the size of your positions. It doesn't matter what you do or what you know, if the size of your positions are wrong, then it eventually won't end well for you. So we have got this position sizing template. The way it works is you enter in the size of your portfolio. Let's say if it was $12,000, below that you can then enter in what the current VIX level is. Let's say if it was 14.3, everything below will then be automatically calculated for you. All you need to do at this point is just use the information to form the backbone of your portfolio, and you'll be just fine long term. This is free for everyone to get a copy of. Click the link in the description, click on free position sizing template, and it will take you to where you need to go. If you want to copy our positions and make money with us every week, then again, click the link in the description, head on over to EDS Premium, get yourself signed up. Inside, you'll be able to see all of our portfolios, large and small, so there'll always be a position for you to copy. There is also a full course inside, so no prior knowledge is required. We will teach you everything that you need to know, and that allows you to learn and earn at the same time. It is also a private community, so you can speak with myself and other like-minded individuals. There's a 100% money-back guarantee, so once you've studied everything and gone through our trades for 6 months, if you haven't seen results, then we will work with you for free until you do, or you can request a full refund. So it's completely risk-free on your part, and it's £1 a month to sign up right now. The price will be increasing. Once you're in, you're in. You don't need to worry about future price increases. And with that being said, I will see you guys on the inside.